Yesterday saw yet another all-time high for gold and silver, but the price action definitely suggests not to get too comfortable. Looking across markets, the risk vibe for Monday was cautiously optimistic as we started the new week. From the scorecard, we can see that stocks are higher for a fourth straight session now, led by technology, with big focus, of course, turning later in the week to earnings from Apple as well as Microsoft. Quickly looking at the S&P and the NASDAQ, we are now back above the pre-Greenland prices, so it's safe to say that the taco trade did it again. Now, the real highlights from Monday, they were metals once again stealing the show. Gold hit another record high above 5,100, roughly up 17% this month. Silver, though, is the main focus, up more than 40% year to date. However, there's something important to understand about silver. Even though silver ripped 13% last night, basically gave back the entire move, and it's currently trading down on the session, which is a bit of a red flag for bulls. This price action does have some of the hallmarks of a classic blow off top, so caution right now is definitely warranted. Here's the thing, silver's implied volatility is currently trading at 70%, which is unprecedented. It means the markets think that it can move about 4.5% per day up or down, which is massive. And this is a very good reminder that volatility works both ways, up and down. You could be up 13% in one session or half the session and then close in the red like we saw yesterday. That means, trying to chase it higher right now is just as risky as trying to call a top. So just be careful out there. Quickly moving on to FX, the yen stayed strong yesterday and the dollar weak, obviously following on from Friday's rate check by the New York Fed. The risk of actual intervention as well as the possible coordinated efforts between the US and Japan should keep the yen volatility high this week. But do keep in mind, threats of intervention is only going to work for so long. We have to keep in mind that it was the fundamentals that drove the yen lower in the first place, and that just didn't go away overnight. So if Japanese officials, if they fail to pull the trigger this week, we could see markets testing their resolve with a push potentially back into that danger zone between 159 and 160. So that's one to watch. For the calendar for today, it's a pretty uneventful day with got a couple of regional PMIs from the US coming up, but I doubt that that's going to be market moving. All eyes right now will be firmly focused on dollar yen for possible intervention signs, and obviously looking at precious metals like silver, it'll be important to keep our eyes and ears on the ground for that. So also we do have our first week ahead webinar coming up next week, so do make sure to register at the link below.